Okay, so today we want to look at fundamental analysis. But before we dive into that, let me just write this USD. Yeah, so today we want to look at fundamental analysis. And then for those who might not know, fundamental analysis is simply how news, political, and economic events affect the markets. So then if, for instance, the economy of the US is going up, how does that affect the markets? If the Australian economy is going down, how does that affect the markets? Essentially, that's what fundamental analysis is. So we want to look at that. But before we continue, there are key terminologies that we need to look at. So for instance, we have something known as a base. I'll just abbreviate it as B, and a quote. I'll explain in a bit what these are. So they just what is it? Let me see. So the base and a quote. I've abbreviated them here as just B and Q. So then, if you have any given currency pair, in this instance, we have Australian dollar with the US dollar. So the base is going to be the first currency in a given pair. So for instance, in this case, it's Australian dollar. Then the quote is going to be USD. Why? Because a quote is always the second pair, is always the second currency in a given pair. So like in this case, USD is a quote. Now I'll come back to the importance of this. So then, how do fundamentals affect charts? Starting with the idea we've just okay. Starting with, before I proceed, here's a quick quiz for you, USD. So in this case, in this instance, what's going to be my base and what's going to be my quote currency? Let me just put that back. So we had New Zealand USD and USD. Okay, so in this instance, what's going to be your base and what's going to be your quote? I'll give you 5 seconds to figure that out. And your time is up. So if you said New Zealand dollar is going to be the base and USD is our quote, then you are right. If you didn't get it right, you can just rewind and get the concept that I explained earlier. You'll probably be able to get it right. Okay, so let me remove everything here. We just needed that basis as a foundation. Now, the most important thing, let me see. To understand is, let me see if I can add. So I specifically use Forex Factory for share this. Forex Factory, okay. Yeah, I use Forex Factory for news, events, and all that. What's most important here to observe is this, right? You want to look at the date when the news is going to be released. You want to look at the time. You want to look at the currency affected. You want to look at the impact. You want to look at the actual news itself. So then, how do I use this? Well, that's a good question. So then how do you use, here it looks like it's a lot. How do you use this to align up with everything that we were just doing for the base and the quotes? Here's how it works. So let's try to find, let me see if I can move back a little bit. Okay, here we had a lot of news release. Yeah. So then, how do we use this news release on the charts, or how do fundamentals translate into charts? Here's what happens. So for the meantime, here's what I want you to understand, the basics of this Forex factor. So what you want to pay attention to is the date when the news will be held or released. Then you also want to look at the time of the release. Then you also want to look at the currency affected. Then you want to look at the impact. Then you want to look at the actual news release itself. So it's good to be aware of the time, the day, the currency affected, the type of impact, and the actual news itself once it's released. By actual, what I mean is once that news is released, does it have a positive impact? A positive impact means it's green here. There's a green percentage, meaning it's going to be pushing the charts upwards. If it's red like that, it's going to be pushing, I said charts, sorry, I meant the market. It's going to be pushing the market upwards. Then here, if it's red, it's going to be pushing the market downwards. Now, with that in mind, here's what you want to do. So what you want to do is you want to ensure that I just want to make sure that this is exactly what's showing there. Okay, it is. Okay, so you want to ensure that the news release aligns with your technical analysis. Now, let's go back a little bit to what I was talking about. Let's just go back a little bit, then we'll go back to the charts as well. So let's say if this is how your chart has been moving, it's been going up. Let's see if I get this part. It's been moving upwards like that. It's been going up and down like that. So then, remember we talked about base and quote currencies. So now a base in this case is the Australian dollar. If there's any news release, let's go back to Forex Factor here. If there's any news release that is green on this other side, how is that going to impact the market? It's going to push the market further up like that. It's going to push the market further up. So meaning the impact is direct proportional to the base currency. Fundamentals are direct proportional to the base currency. What that means is if here we have a positive news release for Australian dollar, because that's the base we're looking at, for Australian dollar, any positive news release is going to positively affect the chart, meaning it's to push it upwards. But then what if it's negative, like in this case here, it's red like that? By the way, how you know that it's positive or negative, you just see the colors. I think I had touched this earlier on. But yeah, you see the colors. If it's red, like this one on top, if it's red like that, it means it has a negative effect. That means it will push the market downwards. But if it's green like that, to push it upwards. So in this case, we're saying it's going to push the market downwards if it's red like that. So we expect a down move like that. From where the market currently is, we expect some downward move. Then if it's green like this, just assume here this is Australian dollar. Or let me see, can I see any Australian dollar where it was positive? Try to check from here. I didn't find any which is released. Okay. Anyways, if you were to assume that this is also Australian dollar, right? Then it was green. We expect this to push the market upwards. If it's red, we expect it to push, like this one, for instance, we expect it to push the market downwards. That makes sense. Then that's for the base. So the base, if you have been given any base, then there's news release on that base. In this case, it's Australian dollar is our base. Any news release that is positive will impact any pair where the Australian dollar, where Australian dollar is the base, is going to be impacted in direct proportion to the news that has been released. If that news release is negative, we expect Australian dollar, Australian whatsoever, Australia and any other pair that it has been attached with, we expect it to be going down if the news release is negative. If it's positive, we expect it to be going upwards. It moves in direct proportion to the news release itself. So in this case, what of USD? Since we've already said that if Australian dollar is the base, we expect it to be moving in proportion with the fundamentals. But then what if there's a news release on the US dollar, not the Australian dollar? And we know that the US dollar in this case is, okay, if you said quote, you're right, is the quote currency. Now, how is that going to apply? Is it still going to work in the same way or is it different? So here's the trick. If USD is the quote, or if you have been given any other quote, then that quote currency, there's a news release on it. It means that it will be the market will be moving in opposite direction to that news release. For instance, we'll also look at examples for this so that I just hit the point home. Okay, so what I mean is this. In this regard, let's say here we had some positive US release. The first one was negative, then we had these two, which were positive news releases. Now, these two, what type of impact are they going to have on the Australian dollar? Let me remove this from the previous. So what type of impact do you think they are going to have? Since the news release itself is positive here from the actual, you can see by positive, I just mean it's green. It means that it's going to have a negative impact here. We said it's going to be opposite. So meaning when there it's positive, here on the charts, it's going to reflect as negative. Then when here it's negative, like this one, for instance, on the charts is going to appear as positive, meaning it's going to be pushing this market upwards. Hope that makes sense. Then the other thing I didn't really look at is this. The type of impact. So you can see here it says impact. So if you see an orange folder like this, it means on the charts, the market won't move very much in the positive side. Then if it's red like this one, it means that the markets are going to be moving with a very high impact to the positive side here, as you can see. So that's what orange and red mean. So red is just high impact news. Then that's just medium impact news, meaning it won't really have a lot of effect. It won't have a big effect on the charts. So that was just a side note, but very, very important. Yeah, so I've removed that. So now let's go into the practical stuff. Let's find Yeah, so that I actually do it fast. Okay, so let's move to a different chart. Mhm. So this is USD CHF. So a quick quiz. USD CHF. Between these two, what is, where does it keep disappearing? USD. Oh, not there. So USD CHF. Then my question to you is this: what is our base and what is our quote currency? Okay, so if you say USD is our base, then you are right. Then that is our quote currency, the CHF, the Swiss franc. Okay, so now what we want to do is, let's go into how do fundamentals actually affect the charts? Good question. So now let's go back to this and find an actual fundamental that was released. Then we translate how that actually affected the charts. So you can see here it has like the date, Tuesday, January 30th. Then the time of this news release, since we're focusing on the USD, we can skip this one for 5 p.m. We just go to this one for 6 p.m. Or even better, let me just try to find where everything was aligned. Okay, yeah, like this one, for instance. So that I make it easier for you to be able to tell what I'm talking about. So here, this was 4 p.m. Friday, February 2nd, 4 p.m. The news release was a high impact news. And what type of, oh, by the way, if it's black like this, it means it's neutral. It doesn't have any effect on the markets. So here we had some green actual news releases, meaning this was positive. So on Friday, this black thing here down shows the date and the time as well. Date and time. So Friday 2nd at 4:30. Okay, somewhere around that level. So probably 4:30 is within that range, the one I've just drawn. Yeah, it's around there. And then here we had some kind of resistance, probably 10 support. We had that. So now the news release is positive. So what do we expect the market to be doing? We expect the market to be trending upwards. And what was it doing? It was actually trending upwards. From this time when the news was released, we saw a gradual increase to the upside. That means when the news is positive, it affects the base currency in a positive way as well. Then if the news release is negative, it affects the currency pair. Oh, sorry, it affects the base in a positive way if it's positive and in a negative way when it's negative. Another example we can look at is, so this was an example of a positive news release. Now let's go to a negative news release. So let's find where we had US dollar, negative, okay. So let's look at the date. When was this released? It was on Wednesday, January 31st. These two here, we can see then non-farm payroll, non-farm employment change, and the employment cost index. These two were negative. Even this Chicago PMI, all these three were negative. And look at the times. That's another important thing. Look at the time. So it started from 4:15 p.m. and the impact for these two is high impact, high impact. Then this was a medium impact. And they're all negative. By the way, you don't just trade based on fundamentals. You have to add other confluences. Like you can see here what I was doing. I drew this resistance, tend support. So after, when the market came back to retest this level, I'll be more confident in taking this trade long because I know it's backed up by price action to the fundamentals aligned with my price action analysis. So I even forgot what was the day, 31st January. On Wednesday, we'll start at 4:15. So January 31st, 4:15, okay. So let me see if we can know where that was. Okay, it was somewhere right around that level. By the way, just a side note, the impact in some instances, okay, in most instances, is not always immediate. Like it's not like just immediate after the news release, you can see the impact. At times, it's like that when the news release has a very, very high impact. Like you can, it always translates at the same time, but sometimes it won't directly go into the direction which is being backed by the fundamentals. Sometimes it will take people out, grab liquidity, then drop downwards now in that actual direction after it has taken out a lot of traders. Because in order for the market to move, it needs liquidity. I'll explain that concept in a later video. So this is where the news was released. Then after that, what do we see? There was this drop here. So now what I was saying is you need other confluences. So for instance, after I saw that there was that negative news release somewhere around this time, once the market goes back to this, I know that when I enter in for a short just means selling. When I enter in for a short, this is going to be supported, one, by my price action analysis. This level, the one I've drawn, it's a zone that the market has time and time again failed to go past. So from this, there was this attempt, there was this other one as well. So these, I think those are like around 3. Also those ones as well. So all that is proving that this is a strong level. The market has failed to break it. Now, once I got the confirmation that USD had a negative news release, now that gives me additional confirmation that once the market reaches this level, it's most likely to drop than to go up. Hope that makes sense. So that's how you join fundamentals and your own price action. I think I'll create a video on price action to help you understand where I'm getting these levels and why I'm marking specific levels as well. Yeah, so that's how you can trade using fundamentals. Now, the last bit of this is we said USD CHF. We said this the USD is our what? Is our base. CHF is the quote. Now, how does the quote affect the market? So how it affects it is in the opposite direction as the base. What I mean is simply this. Let's say we had an uptrend. Yeah, let's just leave it at that. We have this uptrend for USD CHF. Now, if there's any news release on CHF and that news release is positive, by positive, I just mean here when you come to the actual, it is green. It means that how it's going to show on this chart is that it is going to push the market downwards, to push it into a downtrend. Then if the news release is negative for the quote, negative, I just mean here it's green. Oh, sorry, red. The actual is red. It means that when you come back to this, it has to push the market upwards. And that will make sense because when you are trading USD CHF, it's like you're trading or buying shares in the US economy. So once the US economy is doing well, or if the US economy, their improvement is constant, then the yeah, so then if the economy for Switzerland is not doing good, it means that the US dollar is going to gain an advantage, hence pushing the market upwards. Because how you know that the Swiss economy is doing well or not, you can only tell that by the news releases. So if the news release is negative, the economy isn't doing well, the dollar gains value, hence pushing the markets upwards. But if the Swiss economy is doing well, it means it will drag the market downwards. Why? Because the exchange rate is going to reduce. You're not going to be exchanging $1 for a lot of Swiss franc. That's the idea. So you can forget about all that I've just said about economies and just remember that when the quote is moving in any direction that is backed by fundamentals, it will always push the charts or the markets in the opposite direction. So now let me just make some sense by showing you an example. So this is Australian dollar with the US dollar. So if we go back to the same news releases for the US dollar, the ones we had earlier, let's see. Oh yeah, by the way, here we had some news release for the Australian dollar. Now this, since what we are looking at now is Australian dollar USD, it means that this impact here is going to be the same on the charts. We can prove that by just going to Wednesday 31st. Wednesday, okay, yeah. So Wednesday 31st at 3 a.m. or whatsoever. So that was around what time? Somewhere right around here. Seen this, right? Then we had the impact felt there. Then the market kept going downwards. So there is an initial impact where a lot of people actually trade. Those who like trading CPI, news releases, all those things. There's that immediate impact, but sometimes it's not always there. But there's that initial impact, then there is a sweep of liquidity, meaning the market will go in the opposite direction to take out a lot of people, then continue now going in the direction of the fundamentals. So you could see here, right, after that news release, and then let's say you were thinking the market has been failing to break that level. It tried it once there, couldn't break past that level. Now you have some form of resistance. Since you have news now backing up your analysis, your price action analysis or technical analysis, it means that this all of a sudden, this entry all of a sudden is going to have a lot of meaning and value and confluences backing it up, meaning it's likely to play out. I even forgot what I wanted to say before this. Okay. Yeah, I've now remembered. I was talking about how we've talked about how the base affects the charts. Now we want to look at how a quote affects these same charts. So let's go back to this and say on the same day here we had a lot. See, where were we? No, let me pick a different day so that this will make sense. Okay, so here we had negative. No, it's actually positive. The negative is this one on top. So we had these two positive news releases for the USD. Now, positive news releases for the USD mean that here we're going to see a negative move. How do we prove that? Let's just check the date. So here it was on Tuesday, January 30th. And the time it was around 5 p.m. and 6 p.m. That's when that news was released. So if I go back to my chart, okay, so it was somewhere around there. So that news release was around this time. And remember, what impact did we say it will have? A negative. So you can see there's this initial, what I was talking about earlier. There's this initial drop. Then there's a sweep of liquidity, meaning the market moves up, takes out a lot of people, then goes down. You can see after that it continued dropping downwards even more. So that's the type of impact it will have. So USD, here it's showing that it's positive, but on the market, if the USD is a quote, meaning it's the second currency in a given pair, the direction is going to be opposite, to be moving downwards. Then here, if it's negative, like in this case, on Wednesday, no, let me just pick somewhere else. Negative. There's a lot of news releases that day. Let's move on to this. Right here. On the 24th, we were seeing that here it was negative, it was positive. Then the impact was high. Then the date was Wednesday, January 24th at 5:45 p.m. Now let's go back to the chart. Let me just delete what I had put on earlier, remove that. So it was 24th January, 24th at 5:45. So it was somewhere right around, okay. It was somewhere right around that level. Generally, you can see that there was this manipulation I was talking about. There was a sudden drop, and then a push upwards. So what are we looking at? Oh yeah, positive, yeah. So this pushes the market downwards. So we had that instant drop, then the market started pushing up again, then dropping just like that. So after that news release, if I was to zoom in a little bit so that you can, for context sake, after the news release, somewhere around there, we saw this massive drop. So if you had predicted that market had been fading in the past, break past that level, it had been fading to break past that level. By the way, support and resistance just mean the highest point the market has failed to break past, and the lowest point the market has been failing to go lower. So if I was to zoom in, you see that now this will make sense. At this time, the news is released saying that a positive news release is removed for the USD. Now it's positive, but the USD in this case is a quote, meaning the impact it should have on this chart is negative. Remember, a base will have the same impact as the news. So if the news is for Australian dollar, it's positive, then it means on the charts we should see an upward move. If it's negative, then we should see a downward move. But if it's a quote currency, that means if the quote currency is showing that it's positive, like in our case, we expect a downward move here. But if it's negative, we expect an upward move because it's like two economies are competing. So if the Australian economy does well, the markets go upwards. If the Australian economy doesn't do well, the markets, go downwards. But if we can also think of it in terms of what if nothing is changing on the Australian economy? We're just focusing on the US economy. So if the US economy starts picking up and doing well, it means the market has to go downwards. Then if it starts doing, it's not doing well, it means this chart has to be moving upwards because there are two economies competing at the same time. Hope that makes sense. So in our case, that positive news release has to be dragging these markets downwards. And we can see that after the news release somewhere around there, we saw this massive drop all the way to this level. Then there was that push upwards. And if the USD, in our case, we go back to trading view here. Sorry, go back to Forex Factory. If we had at any point had some positive news release like here and there, we expect the market to be going downwards. But if it was negative, like here, for instance, negative as well, we expect the charts to be going upwards. keep referring to charts as in when I'm talking about the market price movements. So just pardon that. Um, Let me remove this and that. Okay, so in case you haven't understood anything, you can ask in the comment section. I think I'll be able to get back to you if there's anything specific that you really didn't understand. So this is the end of the video. I was just looking at how fundamentals affect price movements. I feel like I struggled with this a lot because there wasn't anyone really breaking this down to a level where I would like understand. I had to do like a lot of trial and error to like learn how actually fundamentals drive these markets. So sometimes the impact is not immediate because remember the market moves with liquidity. Liquidity just means where like there are a lot of like retail traders, people like us. So it wants to take those people out and then move in the actual direction. So that's why sometimes the impact is not immediate. But at times, like in this case, I'm sure there was some news release here from the candles. You can see sometimes it's immediate, depending on the type of news release that it is. So then you don't just trade fundamentals alone. You have to couple that with other confluences like support and resistance, your own bias, market structure, Fibonacci, all those things. So in subsequent videos, I think I'll talk about support and resistance because most people think support and resistance is just levels that have a lot of touches like this point. So for instance, what I'm talking about is this. Some people just think this and that, since it will have like a lot of touches, that's support. But I would argue that even just this level is support. Just that level. Sorry, not support, resistance. Just that level is resistance. Even this, just this level is resistance. I'm not arguing with that. But even just that level is resistance, then this level is support. Why do I do that? Because remember, support just means a level the market has failed to go further down. It has failed to break that level going further down. Then for support or resistance, sorry, it just means the market has failed to go any further up. So that means just this and that become your support and resistance. Why I emphasize that point is because if you want to go draw a line from here and there, that is going to be very far off from price action, from the most recent price action. So you would rather just pick these levels the market has just recently failed to go past, and then it will make your work easy. Then now to fill in your blind spots, that's when now you can bring in these other levels. Like this level, you might say, okay, the market might probably have some challenges breaking past that level. So you make that as your TP1. This becomes your TP1, that becomes your TP2. In case it breaks that, you expect to get some more profit. Then you can enter other trades once it breaks that level as well. So support is simply a level the market has failed to go any further down, which is this one, the most extreme low. Then your resistance, a level the market has failed to break going further up. Hence that becomes your resistance. So like this, it helps me to just focus on the most recent price action than trying to draw other, even if you were to put your support here, that would still be correct, but it's far from price action, so it would be irrelevant. You only come back to this once, let's say, the market comes back down here and breaks this level and starts going lower, that's when this will become relevant. Anyways, this is not about support and resistance. I'll talk about that in details in the next video. So subscribe, comment, like, and share. I'll see you in the next video.